speak to you about a Vanguard ETF, exchange traded fund for long-term growth. It's called VONG, V-O-N-G. Please remember, however, that this presentation, as all our presentations, are for educational purposes only. Also remember to subscribe and like. Thank you. Vanguard ETFs are popular. They generally have low expense ratios, high intraday liquidity, and thus they could be quite appropriate for long-term investors. The Vanguard Russell 1000 Growth Index Fund ETF shares, again VONG, V-O-N-G, have the following history. As of December 12th, 2020, the current price was $238.96. 52-week range, which is pretty much all of 2020, we had a low of 131.88 cents and a high of $243.38. This record high was set on December 9th. Year to date, it's up 32.07%. Because this is a growth fund, it has relatively low dividends, but it does have some dividend. The yield is 0.74%, and that is at least significantly higher than the expense ratio of 0.8%. The fund provides exposure to large caps. What are large caps? Different brokers may have different definitions, but companies with market caps of $10 billion or more are generally considered large caps. Yet, historically, the ceilings for each cap, i.e. small cap, mid cap, or large cap category, have gone up because the value of shares in the markets has increased so much over the past few years. The fund tracks the Russell 1000 index, which is composed of 1,000 of the largest US-based public firms. It started trading in September 2010. Its net assets are close to $8 billion, and it currently has 450 holdings. Now that is a significantly large number, and that's good because it means that you don't have to place all your eggs into one basket. The top 10 companies comprise over 40% of assets and include the following. Apple, which is up 67% so far this year. Microsoft, which is up 35% so far this year. Amazon, up 69%. Facebook, up 33%. Google, up 33%. Visa, up 10%. Nvidia, up 121%. MasterCard, up 10%. United Health, up 15%. And finally, Tesla, which is up a staggering 629% so far this year, and will be admitted to the S&P 500 index on December 21st. As you can see, most of these, well, all of these really, have become household names. So these are some of the biggest companies on the planet. In terms of sectors, the top sectors represented in VONG are technology at 45.3%, consumer discretionary at 19.9%, healthcare at 13.5%, and industrials at 11.8%. The significant share of technology here in part accounts for the strong growth this fund has had in this year of stay-at-home orders and working from home. The chart for VONG of this year looks interesting. There's a significant rise in the beginning, then a big downward movement during the pandemic caused a crisis in March, and then a strong and long upward movement into September. Since September has become a bit choppy, but finally set an all-time high on December 9th and is now still very close to that high. The Street typically regards large caps as stable long-term investments. Thus, such names are unlikely to get held down by the market for too long. When the market recovers, these are usually the first companies that investors will buy. Thank you. We'll continue our educational presentations in the coming days with new ETFs or stocks. Please remember to subscribe and like, and also please remember we have a badger.